When we say the financial health of businesses, what do we mean basically?
Well, it's really the ability of businesses to pay their debts on time. It's that simple. So how well are they coping in the current environment? How well are they paying their own creditors?
Okay, so you're saying this reading is the worst since the financial crisis. How dire is it?
So as you mentioned, it's still above the 0 point. So anything above 0 is improving debt stress conditions, and anything below 0 is deteriorating. So, you know, it's not dire, but it's caused a concern. Absolutely. Okay. So we've got different sectors exhibiting different levels of stress. Financial services, as an example, actually coping pretty well, but other areas moving into the negative. For example, agriculture. So of the 9 sectors that we measure, 4 are absolutely, you know, still in the above the 0. We've got 1 that's on the cusp and 4 are below.
Okay.
So it is mixed, you know.
So
mixed.
Agriculture, the drought must be playing a role there. What are the other sectors?
So other things are tourism, you know, where we think potentially the Ebola crisis and the fact that we've had
the visa regulations
and things like that. You know, it really does vary according to the sector. In mining, we had you know, an improvement, and now we're seeing that coming off. So mining and manufacturing, sort of neutral. Financial services looking good. Everything else is we're sort of flagging as risky at this point in time.
I'm a bit surprised because I remember a while ago we were talking about all this cash that business was sitting on, and the concern up to R1 trillion, the concern was that it was not being invested in the economy, but there didn't seem to be a lack of money. This points to something different.
So I think we've been flagging exactly the same thing, that businesses have been playing within their means, that they've not been making those investments, that they've been, you know, keeping the cash on their balance sheets. But we also warned that it could not continue to look as rosy as it was if we didn't see the growth come through. And the reality is, you know, potentially big business is better able to cope with, you know, sluggish growth over an extended period of time, but it's probably the small businesses, and we haven't yet differentiated between those in the index.
Well, but I want to ask you about that, because it looks like a bit of stress is spreading in the economy. So like you say, the big businesses can handle if they are not paid, but for smaller suppliers, they need money coming in to pay their suppliers. Next in the chain, they need money coming in to pay their suppliers. So is this quite a bit of a threat to small business?
Correct, and they, you know, they need to be wary about who they're doing business with. They need to worry about managing their cash flow tightly, understand which sector they're in, what's the average debtors days in that sector. So we've seen it creep up. So 43 days, we're now over 50 days in Q2. It's the worst level we've seen in the last 2 years. If you're outside of that average and somebody's paying you in over 60 days, you know, they are not paying you as the average, and you need to start worrying about whether you're at the bottom of the pecking order and maybe go a little bit.
And I guess that's something you can check. Their record, their previous behavior, just like normal individual consumers. We always complain in South Africa that as consumers, as individuals, we're not saving. Business should be saving, but also we know that it's good for business to take on debt, to leverage and grow using other people's money, basically. Is there a solid level that you look at? Are those levels changing because of the lack of growth?
So we're not measuring that at all. So that's not part of the Business Debt Index, but it's it would be an interesting thing to challenge ourselves to.
What level? Okay, so this is deteriorating. Just give me your outlook for coming months for businesses.
Unfortunately, we're saying with sluggish growth and with what's going on more particularly in China, and I don't think that's no surprise to anybody. We're saying it's watching brief. We're expecting it to continue to deteriorate, and unfortunately it's not all rosy.
And just explain in finality, because we often talk about that, China, the interest rates possibly going up in the US. We are so linked to this global economy. Also, we see internally, like you say, the mining sector, a knock-on effect to manufacturing, a knock-on effect. Just explain those linkages that,
so
that
we're
you're
saying,
seeing
you know,
right now.
low commodity prices likely to put pressure on mining, reverberate through to manufacturing, the consumer taking strain. So they've, you know, we've been boosted a little bit by, you know, a lower petrol price, with oil prices going up, with the rand depreciating. Unlikely that the consumer, that household expenditure is going to continue to drive and, you know, or be at run at the levels that it has. Increased interest rates also further dampen, pressurize inflation, you know, so it all unfortunately is linked, and it all does play on the index. So, you know, it's those macroeconomic factors that we measure, along with sort of debtors days, the ratios within those.
All right, so bad news, but I like your advice for small business. At least check out who you're doing business with. Absolutely. Thank you very much for your time. Managing Director of Experian South Africa, Michelle Beetar.